almost 40,000 USD purchases of one stock, and at the same time plus 20% in 4 months, publicly, in front of 6,000 people. I'll show you exactly how I did it and what I'm holding on to. 2025 is like a roller coaster ride for the stock markets. After a slump, we now have new highs on the S&P 500 index, which has gained almost 7% since the beginning of the year. When I look at my public stock portfolio, which I share within the community, it is up by about 3% points, or roughly 10%, so I am outperforming the index so far this year. Investors seem to have forgotten all the risks and are once again in greed mode, which is not ideal for value investors like us who try to buy stocks cheaply below their intrinsic value. However, I personally bought one stock that I had been eyeing for a long time. It fell to my target price, so I made an investment of 40,000 US dollars. 4 months ago, I started a new $1 million portfolio in front of 6,000 people in the community. Today, a 20% return. But more importantly, I'll show you exactly how. The goal was to show how to build a portfolio from scratch that will make money in any situation. We'll break it all down. Hi, my name is Andra, and welcome to another investment video. If we look at the current stock markets, they are extremely optimistic. Investors are in greed mode, i.e., greed. In a few months, the market has grown from a 20% decline to a 7% gain. Those who bought during the slump made money, and I hope you bought. I've made enough videos about it. I am generally optimistic for the rest of the year. U.S. stocks are breaking records again, and the S&P 500 has climbed above its February highs. The market has thus clearly confirmed that the April correction was only a short episode. Corporate earnings continue to grow, driven not only by big tech but by a broader range of sectors, which makes growth more sustainable. The Fed remains cautious, may cut rates later this year, and 10-year bond yields have fallen below 4.3%. The risk? That we'll overdo it again. But it doesn't look like that will happen. If companies don't disappoint and yields remain within a reasonable range, the market is poised for further growth, possibly even to 6,400 points by the end of the year. That would mean another 3 to 4% on top of what we have now. The market is growing beautifully again, but people who would like to gamble on stocks are rearing their heads, and you know that I am a big believer in getting rich slowly but surely. In the 11 years that I've been investing, I have not taken too many risks with stocks. The biggest risk was Palantir, but I was really convinced of its success. I have been leading an investor community for 5 years, and every time the market rises, some people stop being cautious and they start gambling. I expressed this opinion in the community. On the contrary, the longer the market grows and the more overheated it is, the more cautious you should be as an investor and choose more carefully. When the market crashed in 2020 due to the virus, you could buy almost anything and make money within 1 to 2 years. But when the market has been growing for years, the game is harder. Unfortunately, novice investors in particular get FOMO, thinking they are missing out on something, and then buy stupid things. At the same time, we have a large 11% drop in one of my more dominant positions. AMSL shares, where you can see here in Monterey, my latest purchases and even the latest drop. You can see that even so, I'm still up 10% on the position. ASML is a Dutch company with a huge competitive advantage that no one, not even China, has been able to replicate, at least not yet. However, I believe that if you invest for 1 to 2 years, a 10 to 11% drop can scare you. Honestly, if you've been in it for more than a decade, it won't surprise you much. ASML had relatively strong results. It is buying back its shares from the stock exchange. We can see buybacks. And the company is growing nicely. Yet the drop? Why? Quite simply, today we are used to everyone hyping everything up and proclaiming endless growth. But the CEO of ASML said on the quarterly call that they cannot promise or confirm growth next year. Of course, nothing is 100% certain. The CEO of ASML did well to leave room for macro uncertainties and problems that really do exist, mainly Trump, who has now said that he will impose a 30% tariff on Europe, and ASML is a European company. The CEO of ASML is therefore naturally more cautious. So we have strong fundamentals and then a narrative that is very difficult to predict, namely Trump and his tariffs. Personally, I don't think that 30% tariffs will be imposed. It's just Trump's negotiating technique. It's possible that there will be no tariffs or perhaps only a third. In any case, ASML will continue to grow for many years to come. At least, that's my opinion. And so if the sell-off continues, I will add more of this company to my portfolio. As for my purchase for 40,000 US dollars, I have an average purchase price of $477, so I am slightly in the red. In the long term, I want it to be one of the main positions in my portfolio, a building block, so to speak. Why now? Simply because the price fell below $482, which I found attractive based on my analysis. Plus, the dollar is cheap, so I can buy more shares today for the same amount of money than I could 3 months ago. I'm also looking at what's been happening on the market in recent weeks. A lot of growth companies like AMD and Amazon. Look here in Monnery, you can see the purchases of both companies. Those are the vertical lines, which is the moment of purchase. In a few months, I'm up tens of % on them. I don't want to buy more today. Berkshire is actually a safety net for me. It sits on huge cash reserves and short-term bonds, and in the event of a downturn, it has room to use that cash. With BRK, there are 2 possibilities in the data. FFBRK is insurance for me. It's a hedge. It's a fabulous company at a reasonable price. It's not a moonshot. And does it bother me that Buffett is no longer running it? No, it doesn't. Greg Abel grew up under him for 25 years. He's his business son. And honestly, the company's style and strategy won't change. That's why I still believe in it and have included it in my portfolio. I plan to buy more at $460, and if BRK drops there, I'll buy another 50 shares. At the same time, I sold Apple and Disney, which were small positions in my portfolio, both of which had a profit of around 25%. And it was BRK that I added as one of the main pillars of my challenge. Let's take a look at how this public challenge is actually progressing. In the interest of transparency regarding my purchases and results, let's take a look at the portfolio I started this March 4 months ago, in front of more than 6,000 people in the community. This is the $1 Million Challenge 2.0. The reason I'm doing this is to show you that you can build a profitable portfolio at virtually any time, as long as you know how to allocate your capital. Honestly, these public investments where everyone is watching where I invest don't make me feel good. It's a big responsibility. I announced the start of this $1 Million Challenge on YouTube, which you can see here. You could join and watch. The challenge is not over yet. There are still 100,000 left to invest, but even so, plus 20% in 4 months. At the same time, most of the investments are pure stock picking and a minority are indices. You can see this here in Monnery, where you can see that this portfolio is beating the market, but even so, plus 20% in 4 months. At the same time, most of the investments are pure stock picking and a minority are indices. You can see this in Monero, where you can see that this portfolio significantly outperforms the S&P 500 index over the same period. For example, Sophie is up almost 100% in these 4 months since purchase, but I also bought Dell and AMD here. You can see the average purchase prices in Monnery. I intend to continue managing this portfolio with a target of around 15% per year, which is not extremely excessive, and at the same time is a higher return than 99% of actively managed funds in the Czech Republic. Personally, I think that any investor who puts in the time and effort can achieve a return of 13 to 15% per year. If you want to achieve this return in the long term, my community will get you there. And if you're interested in where I'm going to invest the last 100,000, this will be a very interesting choice. I have 2 companies in mind, and as soon as I make a decision, you'll be the first to know. You can find the link to the community right below the video. And if you're wondering why you're stuck at level 2 or 3 out of 7, check out this video. Take care.